the big and exclusive voice we're really talking about is Info Edge's CFO. Why is he important today? Because Info Edge is the biggest investor in Zomato, which has seen a mega markdown in valuation by HSBC. Brokerage HSBC claims that Zomato should be valued at just about $500 million and not $1 billion. Now today, Zomato's co-founder and CEO Dipinder Goyal has hit back at HSBC in a rather detailed blog with reasons about why they are wrong in various aspects of their business. But to get more perspective and clarity on this, we're joined by Info Edge CFO Chintan Thakkar. So thank you so much for talking exclusively to ET Now Startup Central. I want to start by asking you, as someone who owns 50% in Zomato, what's your first reaction to this report by HSBC, where its analyst has said that Zomato should be valued at a 50% discount to its $1 billion valuation?
Well, this is the first time HSBC has tried to cover us as a company, and I mean, with all due respect, it looks like that the depth of understanding that that should have been there to judge all the businesses, particularly Zomato, seems to be lacking there. So we don't think there is any truth over there. But well, it's a matter of opinion. So somebody thinks of a particular value, then they put out the report over there. But we are unperturbed by that because we can really counter that every point to point. More so for Zomato, because they, in fact, I don't think that they have even visited or met Zomato management and sought their clarification on what their far-reaching conclusions are.
Mr. Thakkar, this is Krishna Kumar coming to you from ET Now's Mumbai studios. In terms of numbers, revenues have been rising gradually, albeit in the last 3 years, but operating losses have also spiked. For 2015, while operating revenues stood at around 97 crore rupees, operating losses spiked to 137 crore rupees. Simple question for me, do you think that is sustainable?
Well, that's why I said that I think we need to go a little deeper to understand what it is and try to really analyze it. So first of all, their revenue is just not going incrementally. I think it's kind of galloping, right? So it was in 2015, it kind of went up by 3x. I know last 6 to 9 months, kind of the way it's kind of going up, it's at least kind of double the revenue. So it's galloping. Secondly, the losses are there because they have been going into different markets. Now each market there is a gestation period. So if you have to really look at the profitability of Zomato, you need to look at the market by market. The markets where they have gone, let's say 2 years back, which they entered initially, like India, UAE, and there are some of them, even which they entered even in 2015. They have already at a country level, I think if my numbers are correct, at a country level there are about 8 countries where they are already profitable. Out of their old, their conventional advertisement model. So if you look at their growth that's happening in terms of they are going to different market, and if you look at the investment that's happening, you can't equate the investment that's happening by setting up a new units in different countries with the EBITDA losses. You need to really see all this slice and dice and see it separately.
Mr. Thakkar, one of the criticisms that the HSBC note has raised is that Zomato doesn't own its delivery network end-to-end. Parts of these are outsourced. Do you believe that it will help Zomato going forward if they scale up and build their own online delivery business as well?
Not at all. I think that's precisely the reason that we like Zomato and we like Dipinder's line of thinking, and we kind of back him fully, is because we think that remaining asset light, remaining kind of with less kind of burn is much more advisable than the kind of some of the burn that we have seen in some of the Indian companies. We are totally not in line with that. And if you really look at good successful delivery companies globally, and there are some some of the good companies in Japan and some of the other territories, I think they are all companies who do not own logistics on their own, right? So we should always sharpen our focus on the areas where we can do a better job, and there is no need to have a logistics on our own. I think our unit economics are much better that way, and I think we should continue it that way.
I'm just going to move away from this, Mr. Tucker, a little bit. The profitability or the lack of it in international operations is another concern that has been raised. Tell us, will the pain there continue or will it come down over the next few quarters?
So if I look at even last year in between H1 and H2, and I know that the H2 full numbers are still not out, and it would not be right for me to really talk about it. But I can say very broadly that I think it has sharply come down. The burns have sharply come down from where they were earlier. And I think that trend will continue, because fundamentally we think that with whatever cash that we already have, we are in a position to go and make a break even internationally, and that's the goal that Deepinder is running with, and so far it looks to us that he's well on track on that.
Mr. Thakkar, Info Edge currently holds about 50% in Zomato. You're still its biggest investor, but this has come down considerably from, say, the nearly 60% that you held a few years back. How's it going to pan out going forward? Will you look at further bringing down your stake, and also the reasons for the same?
Well, they already have money available with them, and if they are successfully able to reach break-even point without any further fundraise, and which we are very really hopeful that they would be able to do, then we all the investors stay where they are, and then grow from the revenue.
Deepinder Goyal in his blog has also spoken about how he has investor banking at current valuations, and that they will also put in more money if need be. Tell us, will you look at investing more into Zomato going forward?
So I'm saying that right now they have all the cash that they require. And are we backing Deepinder and Zomato? Yes, certainly. We are not only backing, in fact we are very proud of what he has created, the kind of brand that he has created. This is probably the first Indian internet brand which has gone global. So it's just not that we are backing. We are very proud of them. And if there is any further need for any further expansion, as I say that we are backing, and we have sufficient cash to back them if required. And so is for the other investors, other investors as well. So I'm sure they are equally backing him.
Mr. Thakkar, Zomato has been hogging the limelight today on social media, pretty much everywhere. But, take us through how the other portfolio companies are faring within Info Edge, considering that HSBC note wasn't just about Zomato. They've also brought down the target price for Info Edge as well.
Well, Zomato is most talked about, but actually if you see that we have taken a much bigger bet in 99 acres, and there also we have done a very good job, because there was so much of competitive intensity which we saw in past 2 years time, but there are so many new players who came, and I think they are all now getting sidelined, and it's looked like that we are emerging as a clear winner. If you look at our traffic share past 12 months, it's been kind of averaging 40 to 45%, and it's a significant growth in traffic share. While actually the 750 crore that we raised for 99 acres as a war chest, most of the money or almost all of that money is still lying with us. So we have preserved our capital, we have kept the war chest as is, and we have grown in terms of traffic share, in terms of our revenue. So I think we are cruising very well in 99 acres as well, and that's a much bigger bet for us.
All right, Mr. Thakkar, I have one last thing to ask you before we let you go. Actually, I want to read out a tweet by venture capitalist Mahesh Murthy, which he put out today. It said, Zomato took in 1,500 crore rupees to do 97 crore rupees sales at 137 crore rupee loss. A fixed deposit would have done better. Your counter.
Well, as I'm again saying that you need to have a good understanding of what they are doing. They have just entered in past 12 to 18 months 22 countries, out of which in 18 countries they are already traffic share leader. So obviously all that requires a lot more investment that has gone into it, and investment in a company, an internet company like Zomato goes through P&L, and that's why those losses that you are seeing it. There is a gestation period between when they go, they start their operation, and by the time they kind of start monetizing it, that's actually a period of 2 to 3 years kind of a gestation period. So you are not seeing that that revenue because they are in the midst of that gestation period. But what is really critical to see is that are they growing in traffic? Are they growing in their brand? Are they executing better? Are they innovating? And when you really look at all these questions, the answer is a thumping yes.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.